I'm Alexandra Leanhard for Elliott Wave TV, and today I'm talking with Steve Craig, Elliott Wave International's Chief Energy Analyst. Steve, now the bad news in crude oil seems to just keep coming. A lot of mainstream analysts are citing the recent decline on China and Iranian exports, but I know the wave patterns usually tell a different story. What are you looking at right now in crude oil?
Hi, Alex. Yeah, the bad news just keeps pouring in for the crude bulls. The market's obviously been in a downtrend for close to 2 years now, and really there's no end in sight. Whatever low we hit coming into what we think is going to be the final fifth leg of a decline that dates back nearly 2 years, this isn't going to be the end of the bear market. It's still got a long way to go. What is interesting at this juncture is the divergence that we're seeing between the declining price and the waning momentum as registered by the relative strength index. Divergence often accompanies important market lows, and it also accompanies fifth waves on many occasions. And in this instance, we've got divergence not only between wave 3 and 5, but between this August low and current prices, which suggests that this is a fifth wave within this fifth wave. If you really take a closer look at this last leg down, here's the daily chart of crude. You'll note that you can count 7 distinct legs coming down here. Well, an impulse wave should consist of 5 waves. When it subdivides further, you add in series of 4s. So a 9-wave move would equate to an impulse wave, and if it plays out that way, from wherever this low comes in, we'll get another rebound back up, followed by one more good sell-off to finish what should be wave 5 of the wave 5 decline. In other words, you'll be able to go 1, 2, then 1, 2, 3, 4, 5, call this 3, then 4, then 5 to complete an impulsive wave 5 decline. And what is interesting at this juncture is the daily sentiment, which is published by Jake Bernstein. We're currently registering a 7. And whenever you see extreme readings in the single digits, that should put you on the alert for a bounce. So while there's nothing yet telling us that the market has hit a low, it's certainly ripe for a rebound.
Market volatility seems to be the theme for the new year right now. Do you expect more big market swings down the road in crude?
Yeah, the volatility's been pretty much one-sided this year, all to the downside. You can see it right here. So when we do get this upturn, it could be a big short covering rally. So more volatility ahead wouldn't be at all surprising.
And what about the other markets you cover? Are there any exciting opportunities presenting themselves?
Yeah, there's lots of opportunities. I would first point to natural gas. We did hit a nice low in December. We rebounded this was about a 41% move in 6 sessions. The market went on to move up a little bit higher than that in the days that followed. We've got a good decline coming back down. But what I would point out are corrections. If this indeed is a third wave low, it should be a fourth wave advance. And corrections typically aren't one-way affairs. In other words, this probably isn't all of wave 4. It's very likely that this is A of 4. We're working on B, and we'll get a C wave advance coming back up that could challenge this $3 mark before it's said and done. But the bottom line is this should be another good shorting opportunity once we can count out a completed fourth wave pattern. Then we would look for the market to sell off into new low territory.
And what about ETF opportunities?
And as far as the ETFs go, they do a great job of mimicking the underlying futures price action, particularly with respect to the U.S. oil fund, the USO. Its wave structure is very nearly identical to that of crude. And you also get a very similar momentum signature. So this is a great vehicle to trade. If you're playing the USO from the long side, you would buy it just as you would a stock, so you don't have the leverage that's involved. If you're going to play it from the short side, it's the same as selling a stock. You do need to post margin in the Shares need to be available for you to borrow. But the bottom line is that it's a great tool for trading the futures without the leverage associated.
Well, as you said, the crude market's been in a downtrend for close to 2 years now, so we'll continue to keep our eye on that market along with the other ones you follow. Thanks for chatting today.
Absolutely, Alex, anytime.
Please visit the link below to learn more about Steve Craig's forecast and analysis. Thanks for watching Elliott Wave TV.